Hello, I'm Robin Gibson, and this is the Harvard House Money Morsel. Welcome back. Thank you for joining us. Please don't forget to like and subscribe. Click the bell so that you get a notification of when we release a new video. I'm sitting today with Nick Rogers, Asset Manager at Harvard House. Hello, Nick.
Morning, Rob.
So, Nick, we've talked a lot in the Money Morsels over the last number of weeks about the US inflation, the Fed, and interest rates in America. But there is a much greater story on the world economy, and China is a big part of that. Yeah. A lot is happening in that space. Can you maybe give some highlights of what's happening, and we could explore that area?
Sure, Robin. Well, if we go back to COVID, China didn't have lockdowns, and so their economy and their tech sector in particular hit record highs at the time, while the rest of the world suffered. That reversed in 2022, so they've gone into hard lockdown. In terms of South Africa, we are a commodities exporter, and they account for 60% of global demand for commodities. So that was negative for our miners. And in terms of the tech sector, there's been a reversal, and they've dropped 70% over the last year or so. And that impacts us because Naspers and Process obviously are at least 10% of the JSE. So two big negatives from China.
Now, we've also seen in China that Xi Jinping, he's now president for life or prime minister for life. That vote went through in the last couple of weeks. What sort of implication has that had on China and the knock-on effect around the world?
Well, over the weekend when he was re-elected for the third time, the world kind of spoke and shares dropped pretty quickly. He surrounded himself with allies, mostly with a military background, and kicked out the guys with business-friendly credentials. So that was a big negative. Shares dropped, but just very recently, it almost happened within a 24-hour period. The US inflation numbers came in slightly below, so the dollar weakened, and interest rates, the pressure eased slightly. That's good for tech shares. But more importantly, China announced that they were going to ease COVID restrictions, and that is yet to be confirmed to happen, but the sentiment is driving the markets at the moment. And on the same day, the government also announced that they would support the property market. There's been a massive meltdown, and that support means that global miners will be getting their orders in the next 12 months that they need. So very big announcements in 24 hours.
Yeah. So Nick, China, the rest of us have kind of moved on from COVID. COVID seems like it's in the rearview mirror. It still has some impact from an economic effect, but we're really not on the vaccine trail as much as we were, or masks or anything like that. But China's been quite different, hasn't it?
Extremely different. But just to string it back quickly, President Xi was photographed, I think, in the last 12 hours, arriving in Bali for a conference without a mask. And that's a big sort of message to the world that maybe they are going to ease their regulations. In terms of Tencent, the Tencent stable has jumped 45% in the last month, wow. Which has been great for Naspers. The miners have followed up as well. So it's been a great 3-week period. We're not out the woods yet, but sentiment has changed, or is changing. And let's hope that continues.
So Nick, the China kind of has been stop-start this whole year because it's sort of hard lockdown, yeah. Open again, hard lockdown, and that really doesn't help an economy. So it's quite critical that the Chinese economy from a global perspective opens up again for us to really see a turnaround in global economics. Is that right?
Correct. I mean, in 2021, the figures out were that China had the biggest impact on global GDP growth. And they have come off quite a bit as an economy. They were supposed to grow at 5%. That's been revised down to maybe 3 or slightly below, which is not good. But news out in the last 24 hours is that they're looking to get back to the 5% mark. So being the biggest driver of global GDP at a time when all the markets are struggling from COVID hangovers, and inflation, I think that's a good sign that they look to be heading in the right direction, and we should hopefully follow in their way.
Awesome. Well, Nick, thank you very much for giving us those insights. I'm sure you found them very interesting. Please don't forget to like and subscribe, and we'll catch you next time. Thank you, Nick.